Moving from one country to another is stressful. Let's zero in on the financial implications for somebody who's moving from the United States to Canada, maybe a Canadian who's moving back to the homeland. Our guest is the author of a book that highlights some of the tax and personal finance implications. We're joined by Sonya Dolguina, who is the co-author of Your Move to Canada. Fascinating topic, and thanks very much, Sonya. Start off with just a regular American who wants to, flee Trump, whatever reason they have for moving to Canada. What are the big implications for somebody like that in personal finance terms?
Yeah, thank you so much for having me on the show, Andrew. So in Your Move to Canada, we do cover both Americans moving to Canada and also repatriating Canadians. And really the main thing that we want to hone in on and focus is planning that needs to be done ahead of time. And that means planning for your investments, planning for your various retirement accounts. So a lot of the main things that individuals need to know is, the current financial institution that they hold their investments in the US might not be able to service them any longer for regulatory purposes. A lot of US advisors, US financial institutions aren't regulatorily able to service Canadian residents. So a lot of people who are moving from US to Canada are in a position where they feel stuck and, what do I do with my investments? What do I do with my retirement accounts? Do I have to sell everything? Do I have to cash it out? So what this book, Your Move to Canada, does is it covers a lot of the personal finance and tax implications and things and knowing what you need to do. For example, your U.S. retirement accounts, things like 401ks, traditional IRAs, you have a few options. Some Americans and repatriating Canadians think, oh, maybe I should just cash it all out. Well, of course, that could come with a very big, heavy tax hit, 30, 40%, and plus penalties if you're under 59 and a half. Other options are rolling it into a traditional IRA. There are advisors in Canada who are actually licensed to manage U.S. retirement accounts, so that could get over the regulatory hurdles. So those are some of the things that we go over. We also go over capital gains planning. A lot of individuals say, oh, Canada has really high tax rates. Maybe I need to sell all of my stocks and mutual funds. But of course, that can also come with a significant tax hit. So that is something that the book also covers is the implications of moving to Canada. You actually get a step up in cost basis for capital gains purposes, which means that you don't necessarily have to pay tax in Canada on gains that accrued while you were in the US. So that is some of the things that the book covers is what do you do with all of your investments? What are some tax smart financial strategies?
The Americans, though, if you're a U.S. citizen or green card holder, though, you still get taxed by the IRS?
Exactly. So as a U.S. citizen or green card holder, you are still subject to U.S. tax regardless of where you live. So most other countries in the world only tax you based on your residential ties, but the U.S. will tax you based on your citizenship or green card status. So that means that a lot of things that you may do in Canada, such as investing in a TFSA, which completely makes sense for a Canadian resident, or buying Canadian mutual funds or ETFs, could actually have quite negative tax consequences if you're a U.S. citizen or green card holder living in Canada. So you do have to tread lightly with those matters.
Give us a couple of guidelines for people, a Canadian moving to America. I know your focus is people going the other direction, but what should Canadians thinking of moving to LA for the weather? What should they bear in mind?
Well, that's a really good point, actually, LA. So what you need to consider is how is the tax treaty going to help you, or is it even available to you if you're going to be moving down to the U.S.? For example, if you have Canadian retirement accounts like RRSPs, those can continue to be tax deferred in both Canada and U.S. federally, but certain states like California don't recognize the tax treaty, and they can actually tax dividends, interest, investments, capital gains for state tax purposes. But otherwise, the really big one when it comes to moving from Canada to the U.S. or just to Canada, anywhere else really, is departure tax, deemed disposition. If someone has assets that have appreciated in value in non-registered accounts, you could be deemed to have sold those at fair market value, and there could be a substantial capital gains as a result. And also, you need to consider that for U.S. purposes, how are they going to tax those gains if you actually sell those stocks in the future? So the book does indeed cover what could happen if you move from Canada to the U.S. and some treaty elections that are available to ensure you're not double taxed.
Just a final guideline. You obviously should get professional help for dealing with this stuff.
Yeah, exactly. And that's what we discuss as well is sometimes individuals, maybe they'll work with their Canadian accountant who isn't really, doesn't know much about U.S. issues, and vice versa. They'll work with a U.S. accountant who isn't versed in Canadian issues. But what you could do is work with a cross-border tax accountant. So in Canada, of course, we have lots of folks who are American. So there are quite a few cross-border accountants who do have that specialized expertise in both Canadian and U.S. tax matters. So that's what I would highly suggest, especially in your year of move or planning ahead of a move between either country. Work with a cross-border accountant who is well-versed in both Canadian and U.S. tax rules.
Sonya, thank you very much indeed.
Thank you so much for having me, and you can find Your Move to Canada on Amazon. Thank you so much.
Good stuff.